Welcome to Inside Saw. I'm Eric. Thanks for stopping by. We're going to talk about the evolution of the trade today, but this time we're going to talk about it in terms of the context of the cycle of accumulation and distribution. We attempted to go over this through a Spaces live audio stream, but I don't think it did a good job trying to explain the visual representation of what cause building, markup, and markdown are. It is difficult to translate those concepts in a live discussion, audio only, when it requires visual understanding of what trends are looking like. There's a lot of components of trends, and that's difficult too. We're talking more than just price, time, energy, volatility. Those are things that are difficult to parse through visually inside one's head without the experience. So I thought it would be appropriate to make an update to that. Took that down and make a video that everyone could use to learn to adapt the evolution of the trade and the phases that it goes through or trends go through. Energy build, which we call nibble, which is phase one. Phase two is primary trend breakout or flips. Three is alignment and energy or resets, and primary trend decline is the fourth, and that's we also call the aging trend. As price moves through that, it breaks down into different cycles of accumulation and distributions inside the primary trend. We surf the primary trend, or the computer does, but we also have to recognize when it's jumping the creek, when we're going into sideways action, which is what we call cause building or accumulation, or cause for short, distribution, or cause for something that turns the market, mark up for a rally, mark down for a decline, and the different concepts that are inside of this. The website has a link to it that discusses the cycle of accumulation and distribution. A lot of the concepts that are in there, I think it's important to know how we talk about markets. These are concepts that were drawn from some of the trading masters in the past, and we have expanded on them a lot because we have computers now. And we use the evolution of the trade, fractal trends. We also use energy inside of that, which is an important part of reading cause building. We're going to discuss that as well. We're also going to go through a couple examples that we're seeing right now, mostly in the agricultural and the commodities market, but it can be applied to almost any market out there. And we're going to go through some of the discipline that you use while using the matrix and understanding the cycle of accumulation. It is this type of content that goes into reports. Although reports looks at longer term cycles, it also looks at intermarket trends, and it looks at different permutations of energy, which we're not going to talk about here today. This is kind of a broad overview, something that's a little bit more complicated than the general review, but it is something that's a little less encompassing than a report. The reports are updated whenever there's something interesting that takes place in the market. So, and then we have a lot of reports on individual markets. But it is this discussion that we're going to have here today that's going to help you parse through not only the reviews, but as well as the reports or anything that's written inside insights on the website or any content that we talk about, because it's very specific. It sounds like it's all made up. But there's a lot of logic and discipline to it, and that's why we have to go through this. And I hope this clears everything up for everybody, or at least represents a tool that subscribers can use in the future. So we've talked about the evolution of the trade, the three phases. You can go inside your matrix, click on the upper link, and I can show it to you right here, this evolution of the trade link, and you will go through this, and it'll discuss in detail how the computer surfs trends over time. And as well as the durability of these flips. You can use the lead M tab, you can use the lead W tab, lead M in particular, to know how many of these flips succeed, how many of them tend to fail, whether or not these nibbles are high risk or low risk based on energy, things of that nature. But we're not really talking about that today. Today we're going to introduce the cycle of accumulation and distribution. Again, it's something we've talked about on and off. We use terms like jumping the creep and marking up and mark down and cause building, but these are something that I think gets lost for people who kind of looking at the markets, at least following us from a distance and not actually using the matrix for its full power. It is the cause building that attracts most of our attention in terms of the accumulation and distribution, and it allows us to use the matrix when markets become indecisive. We know that we enter a cause building because the composite trend, which is a function of the three time frames that are tracked inside the matrix, The primary trend, secondary trend, tertiary trend, which are monthly, weekly, and daily time frames. It's when they go out of alignment. Usually the daily trend goes, if the 3 time frames are up, the daily trend tends to move down first. If they're all down, it tends to move up first. That is the definition of cause building, which is these sideways actions. And what is cause? It's the cause is trying to decide whether it's going to continue going down, or if it's going to continue going up, or if it wants to transition into state from markup to markdown. It is a transfer of power from the weak hands to the strong hands. And you think, well, how's that possible? Strong hands tend to control markup. Well, they do in the early stages of it, but as you progress, and this is the same for markdown, as you progress through the trend, dumb money really takes over. They get too exposed, whether it be on the long side or the short side, and they have to be eliminated from the trend. It is the composite trend which falls out of alignment within the 3 time frames that throws us into cause building, and then we have to wait and see what happens after that. And that what usually takes place is a trend either resets, which means the daily which turned down turns back up, or the daily that turned up turns back down following the other 2 time frames. And in deeper correction, sometimes the secondary trend gets taken out and reset. There's different types of reset, but on the basic level, the reset is a return to triple alignment. It's up or down, and it's within a composite trend that really focuses on price. It also focuses on time. This top axis is the time cycle. This lower axis is the price cycle. It looks a little bit confusing, a lot of wavy lines, but we go through all that. Trends can get extended in terms of price only. They can also get extended in terms of time only. They can get extended in price and time together. They also can show extension in terms of volatility, which we talk and break down in terms of expansion and compression. And that's the composite trend, which represents a function of all 3 time frames. Now, how is that important to the cycle of accumulation and distribution? Well, this plays a role during the cause building periods in which cause is an upward movement, it's a downward movement, it's an indecisive market. It's a market out of alignment, but it is the transfer of control within that is you're trying to decide whether markup is going to be restored or markdown comes back into play. These are all possibilities, and these are all based on the composite trend. So we're going to talk about that, and we're going to talk about these resets, and we're going to give a couple examples, and we're going to go through how we think through them, how we recognize cause building. Again, I think it's pretty self-explanatory when the 3 time frames are of alignment. You can go up and down here. Any market that doesn't have the nomenclature of triple up with an up arrow or triple down with a down arrow, it's in cause building. A good example would be platinum's probably in cause building. Junior majors are in cause building. They don't have the arrows around them. The different arrows are triple up. That's for all 3 time frames, and sometimes you see arrows that have double up, and silver is a good example of a double up market. That means the 3 time frames are not in agreement. But what we're going to use an example here is corn. Corn is one market that everyone likes to follow, at least some of the people that subscribe to the matrix. And it's a market that has all the components that we have been talking about. We've seen a market that rallied through 2022 and then entered markdown. And its markdown's not straight down. You can see that markdown also phases, and we'll introduce a few more charts to show how this works. Markdown's not one straight drop to here. You have a drop, and then you have a reaction, and then you have a sideways build again. That's another minor cause. This would be probably considered to be more of major cause building. But we've lost the trend to the downside. Now, dumb money was controlling the trend here, probably too exposed to corn. And now it's chopping up and down, trying to toss off either the bulls or bears. It's hard to say which one's going to win out of this, but it is the sideways action that's indecisive. And now what you have to do is you have to establish how cause building is going to be resolved. We set up cause building within the reversal tab here for under corn. We pull corn down and we pull out the weekly reversals we come across, and we copy those over. I already did that right over here. The current price of corn is roughly 22.09. This is a slightly older chart, but it's 22.09. And then you have some important reversals under. That represents the lower side of cause building. It drops all the way down to 21.40. That's about here. And the upper band of cause building is about 23, so it goes all the way up to somewhere about in here. So it is a rough area, and that's really a trading range. It's also known as the air pocket, of which the market is having a tough time deciding whether it's going to break out to the upside or break down to the downs. Upside would be jumps the creek and ends. Markdown breakdown would be resumption, and markdown would continue. This is where energy becomes a big part of having to, as we watch cause building materialize, what is energy doing? As we dip down lower towards the lower end of the cause range, is energy spiking upward? And that's some of the things we've talked about numerous times in the corn report, that every time it dips down below the lower side where the price would just smash through the ice, which we call breaking the ice at 21.40, the energy build is not bullish. It's relatively neutral. You can look at it here in corn. Corn's highlighted right there, and the energy build is 78 minus 9 and 3. It's the -9 is the DI3 is the DI2. It's relatively neutral, which means every time it's coming towards this lower trading range, or the lower reversal, which then breaks the ice, you would suspect the invisible hand, if it was going to defend it and wants to transition this trend upward, you would see an energy build that would push above 60% and way up here. So DI and DI2 would be way up here. It wouldn't be floating around the bottom like this. So this is a market that hasn't broken out of cause building yet, but it has a bunch of troubling signs. And I know people are pointing towards some other things we track, and I'm not talking about it here today. We also use the Pro Index, but the Pro Index is no match for energy builds in DI. The Pro Index tells whether or not the buying is either professional based or retail, or really retail or public based, but that's not, it has to be a massive a divergence between price in order to suggest something is terribly wrong. What's probably more important is the path of least resistance for corn is still down. The primary trend, if we slide over here, is not very old. It's only 9 months, and you can see the cycle extension is not very old. And so as we jump through this cause building, and this is what we're doing, we're moving through the cycle of accumulation and distribution. Graphically, we are trying to interpret what's taking place as we're inside of there. It is the energy build that will be the tip-off. If energy continues to slide, or if it rallies even a little bit here and it slides even further, the odds of an upside breakout deteriorate, or they drop. And this plays an important role not only for corn, but all commodity markets, since the corn, soybean, and wheat market are highly correlated to one another, and they're highly correlated to the commodity markets in general, which are tracked down here. And you can see the commodity spot index is still in a bear phase. And it's been like that for a while. This is not going into the depth of a report. We are just trying to understand how to use the matrix to better navigate through cause building, which is sideways action. And we do that by using reversals, and we also do that by studying the energy builds that take place, and we can get the energy builds up in here, and they're these charts that they're very small, or can be accessed by clicking this link here. The next market we're going to talk about is wheat. Its energy build is 85, minus 11, and minus 10. You can click that link and can get that chart. It's the chart right down here. It's a small one, but we have a similar problem, except wheat's a little bit more advanced in terms of where corn is. They both have downward reactions. Its cause building, which has closely mirrored that of corn, is starting to break down. When you pull down the weekly reversals in the reversal tab for wheat, which we're here, and you bring these over, we can use any of the time frames. We prefer to use the weekly. You can see the current price, which is about 553, is below the lowest reversal at 561. That's roughly around in here. It creates a crude box. As this breaks down through that lowest reversal, the lowest line of the sand, you're taking a look at the energy build. An energy build, it's difficult to see it because it's not very big. We can slide back to the main part of the matrix here, highlight this. We're R plus 4 down, triple down this reversed, or the reset the 3 time frames down. So this was in cause building up to about 4 days ago. And as it does so, the energy build is 85 minus 10, or minus 11, minus 10. And it's doing this, it's breaking down, and it's below zero. If this was something that was going to be held, the energy build would be up here, or at least would be a lot higher than it is zero, and we're fairly far below the zero line. It's not huge. We're not way down here, but it's pretty low. So there's going to be no defense mounted here in terms of the energy behind the trend. And that's a concern. There's a couple gaps in here as well that you can visually see on the weekly side of things. But this is cause building too. So as we see this is a market that's looking like it's breaking the ice. I've had a couple comments saying, well, do you want to chase it to the downside? Well, this is a reset. It was a reset that took place 4 days ago on an energy build that wasn't very enthusiastically bullish. It was something that was taking place then, but one of the things that you're going to know that cause building has failed is that if the price rallies back up to this 561, 564, and you can see it's a range, it's got a 5 handle here, it's somewhere in here, comes up here, fails again, and then rolls over, and you know this cause building has failed, and we've resumed markdown. This down arrow right here is markdown, like it is here. I just didn't write it in. That is markdown. And I know there's a lot of people on the internet that are calling for bullish activity in the commodity market, which is really not something that you're looking for in terms of the CRB index, which is they're all down. But it's translating into 2024 is going to be a great year for wheat. Well, that'd be interesting to say the least, as it appears that cause building has broken the ice. We've had a markdown phase, and it all points to resumption of markdown. Now, the computer, as we move through the evolution of the trade, energy, nibble, flip, reset, primary trend decline, the reset is 4 days past on wheat. We don't have a reset in terms of corn yet. You'd have to have a rally, and then it would have to roll over and break below the reversal. But these are all techniques that we use the matrix to better understand sideways trading action. Sideways trading action, I think a lot what happens is people impart their opinions and beliefs. They say, well, I'm bullish commodities because I want to be bullish commodities. They're not studying the primary trend. The primary trend keeps us in the direction of where the path of least resistance. In terms of corn, you can see it's 9 count, and that's BR for bearish. And for wheat, it's 13. That's BR for bearish, and you can see the returns that they've generated. They're pretty sizable to the downside. All this action right here is not changing the primary trend. It's just churning, and you're looking for cues in terms of energy that says, well, this is going to break the ice or jump the creek. When you see the path of least resistance is down for wheat, and you see it for corn, and you don't see any material energy builds, or worse, you see a bearish energy build. Once this breaks below the lowest reversal, that eliminates the cause building. These are all warnings. They're all warnings that we've been talking about in terms of the individual reports. This is not a report. This is a best of an idea of how to use the accumulation and distribution cycle in order to maintain the discipline within the evolution of the trade, not to change your bullish or bearish stance for the path of least resistance. In this case, these two markets are down. Just because you see the market chopping sideways, everyone starts to say, hey, this is a bottom. But it's really just cause building, and it's just restoring control of the trend into the smart money. And the smart money, we have to identify where that's bearish or bullish. And once we recognize at least what the odds favor, that this is a bearish resolution, when this price moves like this, we don't deny it. We don't say it's conspiracy. We don't say the data is fake. It's just taking place. And that's the whole point of using the matrix. There are other, inside the report, we will adjust the energy builds for here and here to recognize whether there's power, and there's other things that we can do other than this current discussion. But the main point of this discussion, which we tried on the live audio stream for Twitter, and I thought it was a failure because of the visual aspect that takes place when you study markets, was to recognize cause building, not only in corn market or the wheat market, but to also recognize it in markets like the dollar. And we'll pull up the dollar here quickly, and you can see here's markup phase here, and inside that there's minor cause building. Then we went into a major cause building, of which we jumped above and jumped the creek there. Now we've entered another minor cause building phase that a lot of people are viewing as going to be a challenge to the bull market, and this is a top and a double top, and we're headed lower. But the primary trend is still up, and we're watching closely is the energy build. And I didn't put it over here, but we can quickly look at it. The energy build for the dollars, 56, 10, and 23. This has got a bullish bias. It's not improving like you would want to see into a decline, but it's definitely above zero. So if this returned to a triple up status, this would be far more encouraging to jump the creek than it would be to break the ice. I mean, you could to do the run the same set of sequence. You can establish where the reversals are here, and you can look at the energy build, and we can look deeper into the energy build. We can also look in what's taking place and some of the intermarket trends as well as the capital flows to better understand what's taking place in the dollar. But the whole point of this is to recognize cause building, mark up or mark down, and then sometimes you get minor cause building and try and understand where the parameters to the up and downside so you can draw these boxes. These are all things that we do in the report to help people out. It keeps the discipline of the evolution of the trade intact so that we don't change our position randomly because everyone else has started to get bullish. These are the things that we tried to talk about in the audio live stream, but I didn't think they worked very well. So we tried this approach to do a video which will better explain in something that you can rewatch again and understand these concepts. Keep in mind that the things that we learn is markup, markdown, cause building, which is can be cause building that can be an upside transition or it can be a downside transition. It can be accumulation. There's selling climax, there's failed declines, there's buying climax, there's failed rallies. These are all things that we use that the computer senses in a way that it creates the reversals, but we try and program our own minds to understand when cause building exists. It's pretty easy. Cause building exists when the three time frames are no longer in alignment. And you know when it's going to happen because the daily cycles are often extended and pushed, and then all of a sudden you're triple up, and then a market shows none of those indications anymore, and then you know cause building has started. These are all things that are universally adaptable to every market that trades inside the matrix. We just talked about corn and wheat today, but you could extend this to the dollar, you could extend this to Bitcoin, and you can really extend it to anything that you look at that's tracked. And as long as you have energy builds and you can study the pro charts, and particularly for bullish and bearish divergences, not just the pros are trending higher. That's just not enough information. But these are all tools that the matrix provides us to better understand not only the fact that the trends, composite trend is not just the daily trend or 10-minute charts or 15-minute charts. It's daily, weekly, monthly, sometimes even longer time frames. And it keeps us adhered to surfing the trend. Surfing the trend is not an easy concept. A lot of people think surfing the trend is, actually, I don't think they know what that is. People often buy or sell and they get rid of it way too quick because they don't understand the cycles and they don't know how to read energy when a market slips into cause building. And that's an important concept that I think everybody needs to address here, and what we address in every one of the reports. We have numerous reports. We talk from sugar to cocoa to cotton to natural gas, crypto, grain markets, currency markets, and even the stock markets. There's a lot of things we cover. They're all important tools for our to help us through. We have a lot of experience at using the matrix. We designed it. It's something that doesn't exist out there. There's no books to read about this stuff. So this is something that we put out there to help people maintain the discipline to keep self out of the equation. If you cannot do that, you will lose. The internet is full of people, social media, even mainstream media is full of people who lose because they cannot keep self out of the decision-making process. They think when markets move against them, it's a conspiracy, and it's someone's manipulating. The Fed's doing this. It's something's not right. They try and impose their will on markets. They just fail to understand the evolution of the trade and the cycle of accumulation and distribution, which on the surface it seems complex, but once you boil down trends into these facets, a cause building, jumping the creek, markup, things of that nature, it keeps things simple, repeatable, and this type of analysis can be applied to every market that's tracked in the matrix. So I hope this helps everyone out. I appreciate everyone spending the time to come by and watch. If you have any questions, let us know. Contact us directly. Encourage everyone to participate in all the reports that we have. You'll end up trading markets you never thought existed, and sometimes those are the markets that produce the best results. But this is all about keeping you out of the equation, removing self from it, and maintaining discipline. And that's something that just doesn't come across too much, that we find out there that's circulating, and the discipline is almost non-existent. Thanks for stopping by, and thanks for watching, and we'll talk to you guys again real soon.